Good morning, students. We are on chapter number 6 of account part 2 cash flow statement. We have already finished with all types of activities and few examples regarding that. Today in this lecture we will be learning about the statement, that is cash flow statement, how to prepare it, and we will see its specimen. So for today our topic is cash flow statement. The cash flow statement provides information about generation of cash flow from different activities. Cash flow is disclosed in the terms of cash inflow and cash outflow. As discussed earlier, cash inflow and outflow is determined on the basis of different activities, where cash flow from operating activities, which is prepared on the basis of profit and loss statement and profit and loss appropriation. Besides this, changes, that is increase or decrease in the current assets and current liabilities, are considered. Second, cash flow from investing activity, which is prepared on the basis of asset side of balance sheet and non-operating incomes of profit and loss statement. And third is cash flow from financing activities, which is prepared on the basis of equity and liability side of balance sheet, profit and loss statement, and profit and loss appropriation. So let us have a look of statement. Friend, this is the statement where three activities we can see. The first, cash flow from operating activities; second, B, cash flow from investing activity; and C, cash flow from financing activity. One by one we will learn these three activities, how to present this in statement. So let us take first cash flow from operating activity. Here it is. The format of cash flow statement: the cash flow statement for so and so company for the year ending on date will come. Now first, A, that is what cash flow from operating activities. In that it is written, first of all there will be two columns for amount, and in the second column, first of all we will start with net profit of current year, which we can get it from profit and loss account, that is profit statement of profit and loss account. Then from the profit, non-operating incomes will be deducted, less non-operating incomes, that is profit on sale of investment, profit on sale of asset, interest received on investment, dividend received on investment, rent income on assets, etc. Right? So they are non-operating incomes, so they will be deducted. And then non-cash transactions will be added. Non-cash transaction, provisions and financial expense will be added. Say for example, depreciation written off, tangible asset amortized, fictitious asset written off, loss on sale of assets, taxation provision of current year, transfer to general reserve, and proposed dividend of current year. So if any of such items are there, they will be added. Right? What else? In financial expenses will also be added here, like dividend paid, interest paid. So by adding this, whatever amount we get, that is called operating profit before changes in working capital. That is called operating profit before changes in working capital. Then add decrease in current asset or increase in current liability, and then deduct increase in current asset and decrease in current liability, and then finally we get operating profit after change in working capital, and from that we will deduct taxes paid for the previous year, and we get cash flow from operation. So friends, this is the entire statement of operating activity. Whatever items out of these we get, we have to present this way, and we get the cash flow from operation or operating activities. And here, if this amount comes negative, it will be shown in bracket, that we very well know. Let us talk about the cash flow from investing activity. Cash flow from investing activity like sale of asset, tangible or intangible, sale of non-current investment, what else, interest and dividend received, rent received, and these 4 items are taken, and from these 4 items, purchase of asset if any, tangible or intangible, and purchase of non-current investment if any, will be deducted. So they are shown in bracket as they are negative sign. And then finally, whatever amounts we get, a sum of all these will give us the cash flow. It may be positive or negative. If it is positive, then it is cash inflow, and if it is negative, then it will be cash outflow. So this is cash flow from investing activity. And finally, cash flow from financing activity. Here it is: issue of shares and debentures, proceeds from long-term borrowings, and increase in bank overdraft and cash credit. These 3 items are shown, and from these 3 items, the following items are deducted: decrease in bank overdraft and cash credit, payment of final dividend, payment of interim dividend, repayment of loan, redemption of debenture preference shares, interest paid on loan, because these all 5-6 items are outflow, so these are deducted, and whatever amount we get, that is what cash flow from investing activity. And finally, the total of all 3 is done. Which total of all 3? That is what total of cash flow from operating activity, cash flow from investing activities, and cash flow from financing activities. And in that total, cash and cash equivalent in the beginning of the year is added, and we get cash and cash equivalent at the end of the year. So this is how cash flow statement are prepared. If we talk about our syllabus, we have only particular activity based on we have sums based on particular activity. We don't have to prepare entire cash flow statement. Either we will be asked for preparing operating activities, means cash flow from operating activity, or from investing activity, or from financing activity. All 3 we are not asked. All 3 are not asked to us. Okay. So next lecture we will start with the first activity, that is profit cash flow from operating activities. We will try to learn that in detail, and also we will be doing some sums based on that. Thank you.